What's up, guys? Welcome back to the channel. I was supposed to be busy doing other stuff today, but I've come down with a little bit of a fever. So since I can't get out and do much else today, I figured I might as well do another update on the MNQ price action from today to show what trades I took and just go over my overall process. So if you're new to the channel, make sure you subscribe and hit that like button. It'll really help the channel out. And if you like these kind of videos, leave me some comments and I'll make sure I continue to do them, because as of right now, it's not something I do all the time. But when I do have time, I like to go back and do a review to help people out that are still struggling to figure out a good strategy that works for them. The strategy I'm going over today is the one I've been doing for a while now, and it's the only one that has a 90% win rate, sometimes higher. And I think I've got it dialed in pretty good, so I'm sticking to it. So, check this video out, and maybe you want to try this strategy in your day trading and see if it works for you. So let's hop on into the charts. This is MNQ Nasdaq futures micro contracts, and as you can see, I have my bars numbered starting with 1. That's when the market opened at 8:30 Central Time. And above the bars is the range. That's the total number of points that bar moved from high to low, low to high, or whatever. This line I have on my chart here is the 20 exponential moving average. And other than that, I just have a few levels on here that I mark just with areas where there might be liquidity, we might find resistance, anything like that. I mark those. And then you may not be able to see it, but I have my 15-minute chart down here in the bottom right. I have my 1 hour chart up here in the top middle. To the left of that's the 4 hour. To the left of that's the daily. So it's always good to start with the daily chart before you start trading to see what's going on the higher time frames. So let's go over to the daily chart for QQQ. This is the Nasdaq. This is an ETF that tracks the Nasdaq. This is what most people watch. And as you can see, since September 11th right here, we hit this level, came down to the double bottom, and then we broke through that level, made new all-time highs a few times, and then we found resistance up here at 637, and since then we've been in this range. So we're still in a range. Price action's gotten pretty tight over here. Yesterday's candle was a strong bull bar, so that could have gotten a lot of people wanting to buy the market, and then today's bar came down and probably snatched up a few more orders for people that didn't get in, or they still want to get in, before we possibly push higher. So I've got these lines marked, this green line, we could see something like that. And then I've got this red line. I marked this yesterday thinking we might break the high of this candle before coming lower, but we didn't break the high, we just broke the low. So either of these paths is possible for the Nasdaq in the short term. We could break out to the upside and go to new all-time highs and just go into an all-out trend phase. Or we're this close to the 200-day moving average, this red dashed line. So we could possibly break below that. And if we do, I've got this area highlighted. Anywhere we get down here below the 200-day moving average, that's where a lot of people that just buy for the long term, that average in over a long period of time, that's where they'll start buying. They'll buy a little bit, and if we get another leg down, they'll buy a little bit more. And as you can see, I've got a couple of levels marked here. This is the 200-week moving average. I don't think we'll get that low, but anything's possible. But we have this level here down around 538. If we break below the 200-day moving average, it's very possible that we get down to that level, or just possibly really close to that level. So that's what we need to look out for the longer term, just over the next few weeks, couple of months or whatever. All right, so now let's go back into the MNQ intraday price action from today. And it's February 26th, 2026. So let's see what we did today. So the first bar of the day was a pretty strong bear bar, but then bar 2 popped back up into the range of bar 1, formed a bullish doji. Bar 3 was an inside bar, a bear bar, but inside bar. And then bar 4 barely broke the low of bar 3, and we left behind a pretty decent sized wick there. So far, according to my strategy, there's no trade. And then we had bar 5, which it has a small body, big wicks on both sides. It's basically a doji candle. But then we had bar 6 that had a decent close towards the bottom of the bar within the 20%, within the lower 20% of that bar's range. So that right there is part of the criteria required for me to enter a trade. And normally I like to see the close below the previous bar's wick, but we didn't get that. But since we had 1, 2, 3, and that was the 4th consecutive bear bar, I went ahead and entered short, and I ended up getting half an ATR profit on that. So ATR here was, I'm not sure what it was. It might have been 50 or 40. I'm not 100% sure. But I did get a winning trade on that. I risked 1 ATR, target half an ATR. Usually it's over a 90% win rate with that strategy as long as you enter on the right criteria. So I got that trade, and then bar 7 had a pretty big wick, so that's no trade for me. Bar 8 was an inside bar, inside bear bar, no trade for me. Bar 9 had a strong close, and that was actually a pretty good trade setup there, and I don't know why I didn't take that, but that would have been a good setup. So let me mark that. That's one I missed. I think I know why I didn't take that one, because this bar here, bar 9, is more than 120% in size than bar 8. So that's part of my strategy. So if the signal bar is over 120% the size of the previous bar, then I don't take the trade. So that's why I didn't get in there. But this is an acceptable trade, just it doesn't meet the criteria for my setup. So, that's not an A+ setup for my strategy, but that's still probably, at least a B+ or A- setup there. So that's a high probability setup too. It just didn't meet the criteria of my strategy. So then we get bar 10, and it was within the size requirements. It didn't break the 120% threshold of the previous bar, and I did get a short from here, and I don't think I got a full profit target here, since this bar was the biggest one in this trend so far. I thought there would be a lot of profit taking there, so I got out. I'm not sure what ATR was, but I probably got a 4th or a 3rd of the ATR, but it was a winner. So then we had bar 11, and that's even a decent setup there. That's an acceptable trade there. I didn't take it just because I had a feeling this trade was coming to an end. It was slowing down, but it would have been profitable even if you had your stop loss above bar 11. This would have been a profitable trade if you were targeting half an ATR. And then we had bar 13, which was a strong bear bar, but bar 12 was a bull bar, and that's a sign that a reversal could possibly be coming up. So I didn't take the trade on 13, and then I just waited. Bar 14, that's an acceptable buy right there. But with the strategy I'm currently using, it just doesn't meet the criteria. I have to have 2 consecutive bull bars. But that would have been a profitable trade. You could have gotten a half an ATR, possibly a full ATR. You could have possibly targeted the 20 EMA, and that would have been acceptable. But I'm sticking with my current strategy just because the win rate's so high. I do miss a few trades here and there, but in the end, I think I will be way more profitable just sticking with the strict criteria for the strategy. So I didn't take any other trades until we got to bar 27. But this right here would have been an acceptable sell. Anywhere in here, you know, that's an acceptable short anywhere in here. The only thing is, you know, you'd have to put your stop loss maybe above bar 9 or bar 7, and then you could target like a 1-to-1, maybe. Yeah, you might get a 1-to-1, but if not, you could get at least half an ATR. But I chose not to take that, sticking with the strategy. So bar 27, since we rejected off that 20 EMA, we had 2 consecutive bear bars, low close on 27. That met the criteria, so I took a short there, and I got out early on that one too, just because of bar 28. I'm not sure which bar I got out on, maybe bar 30, but it just didn't look like the bears had much strength to push it down further, so I got out for maybe a 4th or a 3rd of an ATR, something like that. So then all these sideways bars all the way through bar 49 or 48. In 49 we kind of broke out to the upside, but I was being cautious. I just didn't have a whole lot of faith in the bulls just yet, because we weren't above any of these highs back here from bar 37, bar 24. So I just decided to wait, but bar 50 would have been an acceptable buy. It just doesn't meet the criteria for the strategy I'm currently using. But you could have taken along there, and you could have gotten an ATR, half an ATR, either one. So I decided to be patient. We had these little, this little bit of sideways bar action here, sideways single bar range. I don't mess with that. And then we had bar 55, which looked decent, and then bar 56 looked pretty strong. But since we were at this level here, at the high of bar 24, we were getting close to that. I decided not to take that one either. I thought we could get a few points out of that, but I just didn't want to risk it, because we had been in this sideways range for most of the day. You know, ever since like 9:45, we were in this tight sideways range here. Not the greatest price action, so I chose to sit out. More sideways action all the way through the end of the day. So at the end of the day, I ended up with three trades. They were all winners, for a grand total of $737 net profit, $787 before fees and commissions. So I'm chipping away at these evaluation accounts. These are $50,000 Apex accounts, and so far doing pretty good, over $50,500 on each one. So I'll have those funded pretty soon. And I'm just going to stick with the strategy. It seems to be working pretty well. I've tested it for several weeks, and the win rate is always over 90%. So you can't beat that. Yeah, you have to sit out through some of these potential trades here. And all of these trades that I mentioned, that I marked in blue today, would have been winners if you had your target set at the right spot. So, you know, that's something to think about. I may start maybe trading more of a looser strategy on one account, and then stick with the current strategy on these 3, and then over the course of a few months just see which one performs the best. That's something I might test in the near future, but for right now, sticking with the 90% win rate. So that's pretty much how I traded today, how I was able to walk away with this amount of profits. And this is a good way to pass evaluation accounts, in my opinion. It's passed for me and got me payouts, so I'm going to stick with it. Like I said, subscribe to the channel. Comment below if you want more videos like this, where I go over the daily price action, and I'll make a point to do it more often, and you know, maybe every day. But that's it for today. So good luck trading out there, and until next time, peace out.